Hi there, my name's Donald Boyd. I'm the Head of Growth here at Azets. And today we're in sunny Edinburgh to talk about some technical matters. They may be quite dull for some of you, but they're extremely important for many of us. So today I'm joined by Becky Dawson, who's one of our technical accounting directors based in our Leeds office. So thank you for joining us today, Becky.
Thank you for having me, Donald.
So one of the main areas, and it's been talked about an awful lot in the last couple of years, is the changes to UK GAAP.
Yes.
Just explain to us what UK GAAP is. So let's go back to first principles. This is our first year university days. What is GAAP?
So UK GAAP is the set of accounting standards that applies to UK companies. They don't have to apply UK GAAP. You can choose to apply international standards, but for many businesses in the UK, they are applying UK GAAP accounting standards.
Yeah, and it's always referred to these days as FRS 102.
Yes, that's right. Yes, there's FRS 102, there's FRS 102 1A for small entities, and there's also FRS 105 for micro entities as well in the UK.
Yeah, so there's been a bit of a shake-up though to FRS 102, I believe, as well.
Yes, that's
so maybe
right.
Just to talk me through some of the changes that are proposed to come in.
Yeah, sure. So plenty changes on their way. In fact, it's quite a big shake-up, really. It's probably the biggest shake-up since when Frizzy went out back in, was it 2016 sort of time frame? So what's essentially happening here is the UK are trying to align with the recent IFRS accounting standard changes that have happened over recent years. So it's essentially the UK playing catch-up. They're wanting to roll out what has already rolled out for IFRS on revenue, leases and financial instruments.
Okay.
And all of these changes really are coming into force to try and help with transparency and comparability.
Okay.
As well. I guess if you think about it, investors and stakeholders, if they were to compare two UK entities, one reporting under UK GAAP and one reporting under IFRS, them two sets of accounts would look very different. Mm-hmm. And actually it's quite subtle in the accounting policies where it explains the different bases. Mm-hmm. So really what this is trying to do is it's trying to align UK company reporting with that of international reporting. Right,
okay, so really that alignment, because there's been a dash to simplicity and deregulation for some small businesses versus the high complex nature of IFRS.
Yes.
You know, I trained in a pre-IFRS environment, you know, the SAPs and FRSs was my world. So IFRS I know is significantly complicated, but I get there needs to be an alignment because there's still very large businesses that use FRS 102.
Yes, absolutely, absolutely. I think the key message here is the regulators aren't trying to overcomplicate accounting. They're just trying to increase the transparency and that comparability. Yep. Let's take leases, for example. So currently, under UK GAAP accounting, operating leases are not held on the balance sheet. They are simply disclosed right at the back of the accounts, probably in notes number 34.
So this could be rents or contract lease cars and vans.
Absolutely, absolutely. And businesses could have several properties. These leases could be high value, but actually it's not very clear the numerical value of these leases unless you go right to the back of the accounts. So it's trying to really increase that transparency. Okay, so on leases, so we are talking about putting a value on the balance sheet. Yes, correct. So how would I do that as a small business person? How would I, you know, I've got a lease of an office in Leeds for 20 years at £50,000 a year. So how would I put a value on that? So it essentially needs a net present value calculation. So you would discount all of your future payments back to their net present value using a discount rate. So it's essentially a lease calculator. It's very similar to hire purchase accounting as well. Is that something your auditor can do? Your auditor can help, but obviously there's the classic ethics issue to be careful of. So marking your own homework. Exactly, yes, that exact point. So yes, auditors can definitely help, but there'll also be lots and lots of guidance out there. And if we aren't your auditor, we can also support. Okay, right. No, that's great. So it's got wide implications for most businesses rent their property. There's a large amount that own, but a lot of them rent, so that definitely kicks in.
You know, you've got the engineering businesses out there that are quite capital intensive that will have off balance sheet finance today.
Yep.
We'll have you know, the businesses that even in the media world,
Yep.
you know, where there's a lot of equipment used that's maybe again in
Yep.
operating leases. So it's
Agreed.
quite wide reaching, really.
Oh, it's massively widespread, yeah, and big car fleets as well.
Yeah.
So it's probably worth mentioning there are a couple of exemptions. So low value assets or short term leases, they are exempt from having to go into the balance sheet.
And when you say low value, how much are you talking about?
You're talking roughly about 5,000.
Right, okay.
What it's trying to capture is things like laptops, photocopiers,
Right,
things
okay.
like that. But standing back here,
In short term, what do you mean by that? as well?
12 months.
Right, okay. So there's been a huge dash to electric vehicles
Yes.
and salary sacrifice and
Yep.
a lot of... So suddenly something really unpopular, the company car,
Yep.
has become really popular in
Yep.
recent years. So are we talking about the Teslas and the Porsche Taycans out there of this world?
Yeah, absolutely. I mean, I guess an assessment probably is needed as to who actually has the lease. Is it the company or is it the employee? Especially if these are kind of like salary sacrifice schemes. But if it is the company with that lease obligation, then yes, all of them will be going onto the balance sheet.
Yep, my goodness. So quite a change there from a lease point of view. You mentioned the other change in terms of revenue recognition, or for, you know, those in the industry, RevRec, you know, it's always a good terminology and a shortening of it. So tell me about the revenue recognition, because it was always, again, I'm an old school guy. It was back to professional judgment on RevRec, but it's been codified really significantly in the last 10, 20 years.
Yeah, absolutely. So revenue under UK GAAP will be aligning with IFRS 15, which is the revenue accounting standard for IFRS reporters. So it's basically introducing a 5-step model. And what it's really doing, if we step back here, it's separating different performance obligations within a single revenue contract.
All right, okay. Sounds
Okay.
complicated.
It is pretty complicated, yeah. It's definitely increasing the complexity. I guess we're stepping away as well from the whole risk and rewards concept, and instead we're thinking more about where control has passed over to the customer. Okay, so previously it was very much about when the seller had passed over the risks and rewards, but actually now it's more about when the customer has really taken on that control and can direct the use of that underlying product or contract.
Yep. So, I mean, comes to mind is like car dealerships and things like that, and what other industries would be significantly affected here?
So it's going to be companies who have bundled revenue contracts. So think about software or SaaS companies. So maybe it's selling the access to a piece of software, but actually then there's maybe like a 12-month support package that goes alongside that. Same for hardware, so computer hardware, but again, you might have some sort of support package alongside. Them contracts really need to be separated and these separate performance obligations viewed in isolation.
Right, okay. So the devil is in the detail of the commercial contract here.
Yes. Oh, 100%.
So it's interpretation of the commercial contract. So it's no longer a question of that's the policy. We'll account for revenue in that way. There has to be quite a deep dive into commercial contracts.
Yes, 100%.
Yeah, and I can definitely see that in the software industry.
Yeah.
You know, any other industries you see?
Construction, manufacturing businesses, because then they'll be dealing with long-term contracts and there's probably like kind of like stage accomplishments to achieve.
Yes.
So again, them separate kind of hurdles and separate stages again will need to be reviewed in isolation.
Yeah, okay.
So I think it's going to be widespread, really.
Exactly. So RevRec and leasing.
Yes.
Anything else kicking about on the FRS 102?
They're the two biggies, to be honest. I think leases probably will be impacting most businesses.
Yep.
Revenue, particularly them industries that we've mentioned. I think a number of businesses might be okay, but depends on the detail in the contracts. Again, devil is in the detail.
Yep.
There's other changes coming in. They are minor. There's a lot of changes to 1A, it's a small entity disclosures, where new disclosures now needed on things like key management personnel and like share-based payments, going concern, etc. So your standard set of 1A accounts is going to be longer. Yeah.
So again, really complicated. So I can see with the larger entities, they might be quite set up for this, where they've got a finance team in place. They might have in-house technical accounting or a really strong financial accounting division. But for your average owner-manager, what are they going to do?
Probably need support, to be honest. We will be providing guidance and templates and stuff, so watch this space. We will be here to support clients through this. But yeah, all I can really say is the earlier the better to get ready for this. Obviously the effective date is the 1st of January 26, which doesn't give us much time at all. So I really would be urging businesses to start and think about how are they going to be impacted now. Start doing impact assessments, start calculating what the transitional adjustments might look like. There's a lot to prepare for. Conversations are going to be needed with key stakeholders, so banks, investors, owners, customers. There's going to be lots of impacts. Businesses could be impacted via financial covenants. Obviously, EBITDA is going to change as a result of the lease changes, so that might change covenants. So conversations with banks needed early.
Credit insurers as well, you know, so they'll...
Agreed.
It's quite wide-reaching.
100%.
And in FRS 105, you know, that's exempt, is it, from these changes?
Good question. Definitely exempt from leases.
So we will see lots of businesses that are FRS 102.
Yes.
But they might be able to produce FRS 105 because, frankly, some, dare I say, accountants out there are quite lazy and they just want to produce a standard set of accounts. But FRS 105 is available for who?
Micro companies.
Ah, right.
Yes, that's your super, super small entities.
Okay. So those that are super small, below a certain threshold, they're exempt. Above that, we're into FRS 102 with significant amounts of work. I can understand the work in leases. The RevRec's not so clear because that's one where it's going to be an individual by individual and reviewing contracts.
And it's going to be subjective. I guess that's the key point. Lease accounting is mechanical to a degree. The revenue recognition is going to be subjective.
So Becky, what else could businesses be doing to prepare for these changes in FRS 102?
Oh, various things. I guess one, considering is training needed for finance teams. Are businesses' finance teams aware of these changes and familiar with what is coming in? Two, reviewing financing covenant paperwork, having conversations with the bank and tweaking them covenants if it is going to be impacted by these changes. Three, considering chart of accounts in accounts software. Do you need like new nominals, for example, for like the new lease balances, etc., etc. Thinking about monthly reporting packs. I guess what businesses don't want is a big disparity between their monthly reporting and then their year-end accounts with big swings in the numbers.
Non-accountants never get that, do they?
Absolutely not. Tax impacts are starting to think about whether there's going to be any tax impacts from a client's adjustments.
Right,
okay.
Because the tax treatment tends to follow the UK GAAP treatment.
It does tend to, but I guess it's one of them areas where I would definitely want to assume I'd be getting advice on that just to be comfortable. Yeah,
another one of our Azets tax experts, you know, potentially here on hand to help there.
Yes.
You know, I get RevRec, but right of use assets and things like that, I wouldn't even hazard a guess without a tax professional being beside me. You know, so
you and me both, Donald.
That's it. So anything else you can add there to the businesses can prepare?
Probably potentially any like profit incentive schemes for management as well. Again, depending on how they're structured, could they be impacted? Again, numbers are going to be changing.
Yes,
exactly, If there's targets linked to things like EBITDA, again, we know EBITDA is going to be changing as a result of the lease accounting. So just reviewing schemes like that as well.
Yeah. So we'll end up with 2 sets of books as usual.
Yeah, probably.
Well, Becky, thanks very much for joining us today. It's been really insightful, you know, for someone that lived in this world before and learning about this new world that's kicking in there. So, I mean, we've got our experts here. We've got our own technical accounting team, which is very well known in the marketplace as well. Our accounts and business advisory teams and audit teams are here to support our client base as well in terms of these changes, because you will need some hand-holding through them. They're not straightforward. I'm a chartered accountant and I'm looking to Becky here for help and pointing me in the right direction. So please reach out to your local Azets advisor, and as I say, if we need to, we'll bring in the technical accounting guys to help you. So thanks very much for watching today, guys.